I'm currently under the weather, so my voice sucks a little bit, but I'm going to push through because this message is that important. In this video, we're going to be talking about the good and the bad of FHA loans, especially in the current housing market. And honestly, you've probably heard that FHA loans suck. And to be completely honest, some of it's true, from expensive mortgage insurance to seller bias. There are definitely some real drawbacks to using FHA. But here's the twist. FHA is one of the most powerful tools out there in the current housing market that buyers can use to their advantage. So the question is FHA the worst loan out there, or is it secretly the best? Let's take a minute and break it down. At the moment, buyers are struggling with affordability. House prices are remaining high. Interest rates aren't coming down like a lot of us thought. And saving for a down payment is really, really difficult when the cost of everything is so much higher than just a couple of years ago. And for many first-time home buyers out there, FHA becomes the only real option that home buyers can qualify for. But here's the problem. If you don't understand the pros and cons up front, you could either walk away from a great opportunity or get stuck in a loan that doesn't fit your future needs. So before we talk about why FHA gets such a bad reputation, I'd like to take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up. And if you'd like to stay updated on information like this that can help you become a homeowner, do me a favor and subscribe to the channel. I want to start with probably the biggest con when it comes to using an FHA loan, and that's the upfront mortgage insurance premium. So anytime you put less than 20% down and you buy a home, you have mortgage insurance on that loan. Now, a lot of people don't understand what mortgage insurance is. Mortgage insurance is there to protect the lender in case you end up defaulting on the loan. Because FHA allows a minimal down payment, in theory, you're a higher risk to that lender. Therefore, they have this monthly mortgage insurance. And you're going to have that on FHA. You're going to have that on conventional loans anytime you put less than 20% down. But the biggest con with FHA is not only do they have that monthly mortgage insurance, they have something called upfront mortgage insurance, which is required on every single FHA loan. Regardless of your down payment, regardless of your credit score, you're charged 1.75% of your loan amount back to the loan for using an FHA loan. So in the case that you're buying a $400,000 home, that's going to require a $14,000 down payment because that's 3.5% of $14,000. But here's the caveat. They're going to add a 1.75% upfront mortgage insurance premium back to your loan amount for using an FHA loan. So in the case that you're buying a $400,000 home, you're losing about half of your down payment up front when using an FHA loan. And that's because they're going to add $6,755 back to your loan amount for that upfront mortgage insurance premium. Now, you can choose to pay that mortgage insurance premium out of pocket, but most buyers don't have that additional 1.75%. That's why they're originally using FHA to start, and therefore they end up financing it back into the loan. So in theory, you're losing about half of your deposit initially when using an FHA loan. Now, I know many of you are saying, well, I can't buy a home unless I use FHA to begin with. So it is what it is. It's the cost of doing business. And to be completely honest, I agree with that. But it's important to understand, especially as you're moving into a market where home prices have stabilized a little bit. In some markets, home prices are down. And the reason this is important is because you're going in and buying a home and you're using a minimal down payment to start. If you're losing about half of that to the mortgage insurance premium, that means you have about 1.75% of equity in that property. So assuming home prices move sideways, maybe they move down a little bit. If you have a short-term time horizon, something happens and you need to sell in 2-3 years, chances are you could be upside down on that mortgage. And that's really, really important because that leaves you very little cushion. Understand, when you go to sell a home, there are costs associated with selling that property. You have agent compensation that you have to pay, sometimes on the listing and the buyer side. You have title, escrow fees, attorney fees, depending on what state you're in. So you're going to have cost in order to sell that property. So when you go in and you have a minimal down payment and home prices have not appreciated, you're in a position now where maybe you have to short sell that property, which could impact your credit. Or even worse, maybe you have to keep that property because you can't sell it, and now you're in a property that you no longer like or no longer works because you weren't able to sell that home without a loss. Now, playing off that same thing and talking about mortgage insurance, one thing about FHA that's different from all of the other loan programs out there is that the monthly mortgage insurance you have because you put less than 20% down is going to be on that loan for the life of the loan. You've probably heard that as you get 20% equity in your property, that the mortgage insurance is going to fall off, or that you can call your lender and have it removed. And that is true with conventional loans. What's different with FHA is regardless of whether you have 20% equity in that property or not, you're going to have mortgage insurance on that loan for the life of the loan if you're only doing the minimal down payment. Now, if you put 10% down when using FHA, that mortgage insurance will fall off after year 11, but the majority of people out there aren't putting 10% down when using FHA. They would go conventional if they were going that case. So most people are doing the minimal down payment, which means that mortgage insurance is going to be on there until you end up selling that property or potentially refinancing that property into another loan. Now, those are really the biggest things, but there are some other things that make FHA loans suck, to be completely honest, and that's some of the condo restrictions they have. When you're going out and you're buying a single family home with an FHA loan, there's very little restrictions. Now, there are certain things that property has to meet guideline-wise with regard to the appraisal in order for FHA to allow financing on it, but most of the time single family homes are not an issue with FHA at all. But when it comes to condos, condos have to be approved by FHA. And in the current environment where we are at the moment, where insurance costs are high and some condos aren't keeping up with the maintenance on properties and what have you, there are many condos out there that were FHA approved that are no longer FHA approved. So if you're an FHA buyer, chances are you're somewhat limited on what you can purchase because not every condo complex out there is FHA approved, which means in many markets out there, it's wiping out a huge chunk of the inventory, the options for you to be able to buy a home. Now, and if you're stuck in a certain price range and everything in that price range is not FHA approved, it's going to limit what you're able to purchase. Now, there are ways to get around it, but it's somewhat difficult, especially in the current environment with the insurance issues going on and HOAs having to provide documentation essentially that they're worthy of being FHA approved. So just be aware, if you're somebody out there using an FHA loan and you're buying a condo, it might be a little bit more difficult. But here's something I want to say. A lot of people hear FHA and they say, you know what? I never want to use an FHA loan because of everything you're saying, Jeb. But what I'll tell you is there still are advantages to using FHA versus a conventional loan. And the most important piece here is having a lending team that can guide you through that process, tell you the pros, tell you the cons, compare the two. That's really the important part. Getting a loan comparison of all the loans that you qualify for when going through that pre-approval process. So you can compare FHA to conventional. You can compare the down payment on one to the other, the cost to close, if you will, how much money you need to bring in on one loan versus the other, and let you make the decision. In that case, maybe you choose FHA. Some cases, maybe you don't, depending on things that you heard, things that you're comparing it to. Either way, it's important to work with a team that understands it, can guide you through the process. Our team helps a lot of people here understand FHA loans and get pre-approved. So if you'd like to work with a team that understands it, can guide you through the process, check that link in the description. Now, there's also some loan limit issues with FHA if you're in a high cost area. Now, for the majority of people out there, that's not going to really be an issue, but it could be an issue if you're in a high cost state, New York, California, Florida, some of these markets where the median home price is over $1 million. FHA can definitely become an issue. But there's also an issue out there at the moment with FHA loans that I absolutely hate. And that's sellers having some sort of bias against an FHA loan because a buyer's putting a minimal down payment or because they've heard that FHA loans are only for low qualified buyers or buyers with lower credit scores. That's simply not true. It's a myth. It's not accurate. And it kind of pisses me off as a real estate agent for a seller to say, hey, we're not even going to look at that offer because they're using an FHA loan. At the end of the day, they need guidance. They're ignorant. They need a real estate agent that can guide them through that and help them understand that FHA loans are not bad loans. They're just loans for people sometimes that have minimal down payments or in some cases maybe lower credit scores, but they could be more qualified than conventional buyers out there in many cases. So it's important to have a real estate agent on your side that can have that conversation with the selling agent to help explain your situation, who you are, but it really shouldn't be a con, but in some cases it is. So just be careful out there. Make sure, whenever you're choosing your real estate agent, that you have one that understands FHA loans and can provide any necessary information to the other side if needed to help them show that you're a qualified buyer. So with all the negative things I've said about FHA loan, why would anyone actually use it? That's because there are some true advantages to using FHA loans. There are pros, if you will, when it comes to FHA. And the first, thing that most people probably already know is it allows a minimal down payment. You only have to put 3.5% down towards the down payment when using an FHA loan. That means if you're buying a $100,000 home, $3,500, $200,000, $7,000, $300,000, $10,500, you can do the math from there. But a minimal down payment compared to, some other loans out there that require larger down payments. Also, they allow you to buy with lower credit score. You can buy using an FHA loan with a credit score as low as 580, putting just 3.5% down. If you have 10% down, they allow credit scores as low as 500. Now, I'll be completely honest, with the lower credit scores, it's difficult still to get FHA loans approved, even though they allow it. That's why I'd recommend, if you have lower credit scores, rather than rush out and buy a house, I would start working on my credit. I would work on my credit and then try to go buy a house, because credit is probably the most important piece when it comes to buying a home, because it impacts everything. It impacts how much loan you can qualify for. It impacts the interest rate, impacts your monthly payment. So the higher your credit score, the better terms you're going to be. And even with that said, you can have a 780 credit score and still use an FHA loan. In some cases, it still makes sense to use an FHA loan, especially when you're using that minimal down payment option. And that's why it's really, really important to get that comparison that I mentioned earlier, side by side. Compare a conventional to an FHA loan, so ultimately you can decide which loan is best for you. Your lender should never be telling you, I wouldn't use that, or you should not use that loan. Ultimately, it's your decision. They should just be providing guidance to you so that you can make the best decision for yourself. So if you'd like to work with a team that can help guide you through that process, make sure you check that link in the description. Now, one of the other huge advantages to using FHA over conventional is it allows higher debt to income ratios, which means you can qualify for more home using an FHA loan than you can any other loan out there. They allow you to have more debt than any other loan program out there. And that's because they allow you to have a higher back-end debt-to-income ratio than conventional loans, which can allow you to stretch a little bit further and qualify for a little bit more home with FHA than conventional. Now, that doesn't mean everybody should rush out there and do it. In fact, I don't recommend pushing those debt-to-income ratios unless you have income that's maybe not able to document on, your loan application. Sometimes people drive for Uber or DoorDash or do different jobs where they have income and they can't use it to qualify for the mortgage. And therefore, when you're looking at the mortgage, it looks like they're maxing out their debt-to-income ratios. And you go, why would anybody spend 57% of their income towards a mortgage payment? Well, that's because they have additional income. So one thing about FHA is they allow you to push those incomes a little bit higher than the other loan programs out there, which also allows you to qualify for a little bit more home. Now, the true advantage of using an FHA loan, in my opinion, probably the biggest pro out there, is that FHA rates are about 0.5%, maybe sometimes 0.75% better than conventional loans. So today, as we speak, conventional loans are somewhere around 6.5%. Well, guess what? FHA loans are just under 6%. So that's a 0.5% difference. And I know what you're saying. Well, Jeb, FHA has monthly mortgage insurance. Yes, it does. But conventional is also going to have monthly mortgage insurance when you're putting less than 20% down. And chances are the monthly mortgage insurance on FHA is going to be less than that of conventional, especially when you're using that minimal down payment. So you're going to end up with a better blended rate with FHA than you are with conventional, which means when you're comparing apples to apples, the cost of that home is probably going to be less expensive using an FHA loan than compared to conventional. Last pro I want to talk about when it comes to FHA is FHA allows you to use the minimal down payment and also purchase multiple units. You can purchase a duplex, you can purchase, a triplex, a fourplex, and still just use the 3.5% down. Now, for many markets out there, it's not going to work. In California, it's very, very difficult to use an FHA loan with units because they have something called a self-sufficiency test, which basically is going to cancel FHA loans out because it doesn't work with 3 to 4 units. But there are areas of the country where you can still purchase multiple units and use that FHA loan and just use a minimal down payment and rent out the other units in order to help you make that mortgage payment, which basically means you're using other people's rents in order to pay your mortgage. You're gaining the appreciation. You're getting all the advantages while someone else is actually helping you. So that's one of the huge advantages of using FHA. But the question is, when does FHA actually make sense? For a lot of people out there, I believe FHA is great if you have a minimal down payment. Maybe if you have credit scores under 680, FHA is definitely something you need to consider. Now, if you have high credit scores, again, it's all about getting that comparison, comparing conventional to FHA so you see a side by side and you can ultimately decide what makes sense. Now, in many cases, if you're just using the 3.5% down, and you have high credit scores, it's still going to make sense to use FHA, but the lower your credit scores, the more it's going to push you towards using FHA loan. Now, on the flip side, when shouldn't you consider an FHA loan, especially in this market? I think if you have a shorter term time horizon in this environment, FHA is going to be a really tough loan to swallow because of the potential of home prices moving sideways, home prices potentially moving down in some markets out there. And if you go to sell, you're going to be upside down on that property. So I think you need a longer term time horizon. I think you should have that regardless of the type of loan you use because of everything that we're talking about here, but more so with FHA. So here's my question. After hearing all of that, do you think FHA loans suck? Or is it the potential cheat code out there for first-time home buyers? Do me a favor and let me know in the comment. Either way, here's the truth. FHA loans do suck if you don't actually know what you're getting into. Here's the kicker. If you play it right, FHA loans can be your path to home ownership. If you're not in a position to save a lot of money towards a bigger down payment, then FHA might be the only option. In fact, I've had several clients buy using an FHA loan over the years, be able to refinance into a conventional loan, get out of the mortgage insurance. Now they have 20, 30, 40, 50% equity in their property, and they never would have gotten that had they not bought using an FHA loan. So don't get caught in the headlines. Make a decision that's right for you based on the information that we discussed today. Again, work with a team that can break down the pros and cons, show you a comparison so that you have all of the necessary information to be able to make the right decision. Now, if you're thinking FHA might be the right loan, but you're wondering about all the loan requirements, what about income? What about employment? What are all the necessary things you need to use FHA? Do me a favor and check out this video here.